Hello everybody, Lepakang here. I will be basically breaking down the trade that I took on EURUSD and what I'm anticipating for today or the next 2 days. Okay. Um, this is a voiceover, and the reason is because I do not have a mic. I do not have a microphone that I can use to record videos. You know, on my computer. So I just basically transfer it to my device, my phone device, and then do a voice over the videos. Okay. What you are seeing here is called the triple screen. So it's basically a way for a person with one monitor to keep an eye on three separate time frames for the same pair. Okay, so the screen on the left would be the lowest time frame. The screen, the two screens on the right would be the highest time frames. Okay, which would be the weekly and the daily in this case. This is how the triple screen would look like. You have the 4 hour time frame, the lower, weekly, and the daily high time frames on your right, which allows you to keep an eye on all time frames while basically being able to execute on the lower time frame. So on the 4 hour time frame, we are aware that a low has been ran there. A sell stop liquidity run has taken place, which basically means that the pending float, which was sell stops, have been activated to open float, and now those orders are willing sellers at the market. So we as smart money traders, our aim is to buy from willing liquidity at a discount. Okay, so that's basically what occurs on a sell stop liquidity run. So the reason why I put the weekly time frame on the right there is because the trade was basically based on the weekly time frame. So if you go on Twitter and check on my Twitter page, my Twitter feed, you would see that I was looking for that low to be ran in order for me to be a willing buyer on EURUSD at a discount. So if you look at that price range there, you see that run up that broke the bearish order block, which turned into a mitigation block after liquidity has been ran. And obviously that fair value gap that you just saw there was my point of interest. So I did take a couple of trades prior to the one that I took on the 29th. Okay, but obviously it kept running back down and stopping me out until I got into this one. Okay, so that's the trade that I basically want to break down. Okay, so the trade premise was based on the weekly, and it was a weekly return to true mitigation block, sell stop liquidity run of a weekly low into a fair value gap, which was a buy side imbalance, sell side inefficiency. Once that sell side was delivered there, I started looking for buys on EURUSD. So this week we see a liquidity run occurred, and that's when I entered on Thursday. You see 50% threshold of that down candle there that I entered on. That's a bullish order block, an institutional reference point that indicates smart money buying. Bullish order blocks can only be printed by EBDA where sell stop liquidity runs occur. There cannot be a bullish order block where there is no liquidity run. Okay. Another example of a mitigation block, or a true mitigation block, that up candle prior to the down move, price went up and violated it. When price returned, after taking out that bearish order block, and price violated that bearish order block to the upside, it became a true mitigation block. Just like on that weekly time frame, if you go back, it's the very same setup, and look how dynamic that move was to the upside. You see liquidity there. Liquidity engineered right above that mitigation block. Just that liquidity run occurs, and then price ran up higher. Now what I am anticipating now is the bullish order block over there. Down candle prior to the move up. That was printed on a key institutional level. You know those swing highs and swing lows that the ICT was teaching us to put down on our charts so that we don't trade in empty space? The ones that you get on the higher time frame. That's ICT origin stuff, bro. Asian session. Now from the Asian session, what I'm anticipating is that price has created a liquidity void. Okay, and it has basically traded one side on that run up. So since there is a buy side imbalance, I'm expecting the state of delivery to be on sell side. Up until we trade into that bullish order block, and then price will trade higher. Of course, while we trade down into that bearish order block, we would be expecting price to engineer liquidity prior to trading into the bullish order block.